Hey everybody, what's going on? It is James here, and I wanted to sit down and do a market update. I figured it's probably time. Some news broke today with the Fed cutting interest rates, so I want to talk about that. We're going to talk about what we're looking at as a macro picture, and then we're going to look at some charts, and of course, we're going to look at some Bitcoin. So first things first, the Fed did cut the interest rates today. I am just some guy sitting in a spare bedroom, but I struggle to understand the reasoning behind that. Here's my thought process. I'll make it short and sweet. Those interest rates are designed to basically save failing markets. It's a tool that they're supposed to be keeping in the toolbox to try to save market crashes and things like that. It was never designed or intended to be a tool to make markets pump new all-time highs. And I believe that they're playing with fire in a very, very big way, because when they're using those tools at all-time highs, what are they going to have left to use when the market finally rolls over? I think that they're doing the same thing that they did in 2020, which then I was calling it out as well. And same thought process. I just couldn't believe, as a guy who'd only been trading for 3 years, I could clearly see what was going to happen. And yet these people who are in charge of these decisions either didn't see it or didn't care and decided to move forward with their, quantitative easing and lower interest rates and these stimulus checks and everything that, I had friends who were on the lower side of the income spectrum, celebrating about these big fat free checks they're getting. And what I told them at the time was, enjoy it while you can. You will pay it back tenfold. Their thought process was that I was simply bitter because I didn't get a stimulus check, but it wasn't the case at all. I just, supply and demand made it very clear what was about to happen. It's the same thing that's happening now. Like, we are seeing historic layoffs at companies like Amazon, at companies like, I believe it's UPS. We're seeing AI displace tens of thousands of workers. I wrote an article about this on my blog, talking about how AI is essentially playing the same role today that mechanization played in the Great Depression. And a lot of people who argue that other side say, yes, but new jobs are created. What they always fail to mention is those new jobs typically take decades to create. So sure, by 2040, all the jobs that are lost will be replaced by new roles that don't yet exist. But we're not in 2040, we're in 2025, and people who lose their jobs today need a way to feed their families. So I am concerned with that a great deal. So that's my macro picture right now, is I'm very concerned about the steps that the government's taking. I think that all this has gotten far too political, and I'm not going to get into the politics arena. It's a losing battle, but I do think it's gotten too political, and it's gotten to be more about egos than it has got to do with what's actually best for the American citizen. So that being said, the first chart that I want to take a look at is actually going to be QQQ, and then we're going to move over to crypto. This is extremely concerning to me. Essentially what we have is we had this market sitting at all-time highs. It gapped up on Friday, gapped again on Monday, gapped again on Tuesday, gapped again today. And when you start getting all these gaps like this, if it's after like a bear market or after an accumulation phase, then a lot of times that's momentum. That's a really good sign. And some people could even argue that maybe this was reaccumulation and that's what's happening. I actually think it's the exact opposite. I think these are the final dying breaths of the market. It looks like exhaustion, right? People who have finally capitulated and just given up, hoped that the market was going to turn over and said, screw it, I'll get in. Better late than never. And typically when those people finally capitulate, that's when the market turns around. And so I'm not calling tops because it's not enough by itself to call tops, but it's very, very sketchy looking. What's even more sketchy looking, though, is when I look at the Magnificent Seven, which of course now makes up like 40 to 50%. I don't remember the exact number off the top of my head, of the QQQ. So this is the Magnificent Seven here, and we can see that again, it's literally just basically been straight up. This is a log chart, and it still looks like one parabolic climb. If we put it on a non-log, it's going to actually be a bit of a shell shock for some people because it looks like this. And anybody who looks at this is going to immediately recognize similarities between a textbook bubble chart and what we're seeing right now. One of the telltale signs of the last leg of a bubble is the blow-off phase tends to double very, very rapidly. So if we look at the lows back here in March or in April to where we're at now, this is up 72%, and it's up 72% in less than 6 months. That's absolutely parabolic. And we know that parabolic curves, by textbook definition, tend to correct to the 80% Fibonacci level. So if this is all one giant cycle, which this chart's only going back to 2014, the 80% level would put this particular asset, which again, this is not a real asset, this is the Mag 7 averaged out. It would basically put it down around this level here, retesting the 2023 lows. Okay. When you think about that, that's not all that obscene. We're not talking about retesting lows from 25 years ago. We're essentially talking about retesting lows from 2 years ago. That's what an 80% retracement would look like. But as far as dollars go, what would it look like? Well, you're talking about a drop of about 75%. So if I have $100,000 invested equally across these stocks and they dropped 75%, I would obviously be down $75,000. If we look at this same chart and we start looking at crypto and say, how's crypto as a whole, not just Bitcoin, but Bitcoin as a whole, how's it doing? Again, this is the total market cap versus the Magnificent Seven. And we can see that we have signs of distribution going all the way back to the 2017 highs, which looks like a buying climax, followed by signs of weakness. This looks like an upthrust, and this looks like last points of supply. So that's a little bit startling, because what that says to me is the same thing that I've mentioned in previous videos. It looks like money is rotating out of the cryptocurrency sector and it rotated into the AI stocks. If we look at Bitcoin versus the QQQ, it's not going to look all that different, because again, the QQQ right now is made up heavily of the AI stocks, but it will look somewhat different. This is the chart that, of course, we've now been following, or I've been following for a number of years. I first posted this exact chart up in 2021. Of course, at that time, I only had complacency marked out because none of this had happened yet. And so that was, we followed this. It did a great job of, kind of letting us know emotionally where the market may be at. Threw us for a little bit of a loop, or at least me for a little bit of a loop, because it got down to anger, and then we never got that depression phase that I was waiting for. Bitcoin got down around 15, 16,000, and I thought, oh, this is looking so perfect. It pumped up, and I thought, we're going to get that one puke, take it down to about 12,000 US dollars, and that'll be depression, and that's where, I'll start to get heavily back involved. I tiptoed in back here, but I waited for depression, and it never really came. So that was a little bit different, or, kind of deviated from this chart. But other than that, it's been really spot on, especially when we got it to the hope phase and it threw down the bear trap. A lot of people started to panic a little bit, when in reality it was just a buying opportunity. We came up to the top of this multi-year range or channel. And, I expected some resistance there because it was old all-time highs plus top of the channel. But I still felt like, we were probably in optimism, and that we were probably going to see this last leg toward euphoria, belief throwing euphoria. I no longer feel like that's, the case. And I had said this on a video, I don't know, it's probably been about a month or so ago. And somebody called me out like, oh, because it's going down now, it's not an optimism. And right, because what's actually happening through, if you zoom in, again, this looks a lot like a distribution type of pattern, where we had a buying climax, followed by signs of weakness, followed by an upthrust. In this case, we even got a potential upthrust after distribution. This looks like a last point of supply, and then it's moving down. So this looks like distribution to me. Bit of a bummer. This is the Bitcoin US dollar chart. This is the range that I've been talking about for a little while now. It's been bouncing between these highs and lows. A week or two ago, I said down here that if I had to make a play, I'd be looking for longs, not shorts. That I felt like it was more likely to go up than it was to go down at that exact point. But even then I said, really, it wasn't a great place for me to get long. It wasn't something where I felt confident going for 130 or 140,000. That it was still very, very sketchy to me. We came up, retested our flat 50-day moving average, and now we come back down and tapped our 200-day moving average again. This again shows signs of distribution. It looks like the upthrust after distribution back here. It looks like a breakdown, and this looks like a test, or a test that was called last point of supply before the markdown phase begins. So versus the US dollars, Bitcoin is concerned. And we look at volume, what we see is the big volume days, they're red days, right? We're not seeing great big green volume days. We're just seeing red, even back here, red. That's called a bearish volume impetus. And again, it's a sign of distribution. So the US dollar chart on Bitcoin looks bearish in nature. The Bitcoin versus QQQ looks bearish in nature. The Bitcoin or the total market cap versus the Mag 7 looks bearish in nature. If we look at Bitcoin versus the Mag 7, not the total, but just Bitcoin by itself, again, it's pretty much the same pattern. It looks like distribution to me, and I believe that we're in for a significant drawdown. So I'm pretty bearish. And again, I want to be very clear that I don't have a crystal ball. I could absolutely be wrong. This thing could just completely moonshot and it could surprise me and leave me with egg all over my face. Would not be the first time that that's happened. And I guarantee if it happens, it won't be the last time I'm wrong about something. So by no means am I saying run out and sell all of your assets. I'm simply giving my 2 cents, and my 2 cents just going strictly off of the technical analysis and going off of where we're at fundamentally in the macro picture. I feel very, very uneasy about this market. So those are my current thoughts on the market. You may have different thoughts, and I'd love to hear those. If so, leave me a comment below. But as always, please remember that I am just some guy sitting in a spare bedroom, and that means that nothing in this video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency, the stock market, precious metals, Forex, or any other tradable assets. Be sure and give the video a thumbs up. Again, leave me a comment. Make sure you subscribe to the channel for more content like this. And as always, most importantly, please remember to trade safe.